Good morning, traders. It's 8:01 a.m. Chicago time on Thursday, the 5th of April, 2018. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The current market allocation is to risk. The DAX has caught up with the U.S. indices on a relative basis. The DAX is up huge today, 290 points, 2.42%. Currently, the Euro stock's up 2.27%. So pretty strong, pretty aggressive push in Europe. The Nasdaq is up 55 points or 0.84%. The S&P up 0.5%, 13.5 points. The S&P traded from the point of control left behind from yesterday all the way through to 2667 on the high, on relatively decent volume. Let's look at that. So ES, yeah, it's got about twice the volume that we would consider to be usual or normal or common. Looking ahead at, we had several numbers out of Europe. PPI came out and some other stuff. We also had initial claims and trade balance, which came in about a half hour ago. There is nothing left in terms of the economic figures, but we do have Fed Speaker Bostic. Not sure how much impact that'll have. The big thing to pay attention to today, as it has been for the last, months really, is news flow. And the idea, the conversation initially yesterday during the Asian session on Wednesday overnight my time, is that China's imposing tariffs on 108 products, causing a hit of about $50 billion a year to the U.S. economy. And the market didn't respond, didn't take lightly to that. However, by the time we opened, the market had been trickling back up towards the prior day's range. And so let's look at that. And has basically opened right underneath it at 2572.50, given the prior day's low at 2573.50. And we've run up. A lot of that was fueled, apparently, the why doesn't really matter. But a lot of it was fueled with the idea that with this these announcements that this is not actually taking effect. This is under consideration. Both on both sides, the tariffs on the U.S. side and the Chinese side are just a part of the negotiation process. So the market responded well to that. So as far as what we expected yesterday versus what we got, just to look at our plans. Whoa, why is this? Yeah, okay. Just to look at our plans, during the time that the trader bite was going on, the market was trading in range out of value. It was trading around 25.78. So the primary expectation is that we would likely continue to test lower underneath the prior day's low. The expectation is for it to push down to 25.69 or so, and then find a bid, and then we would get an impulse up, and that would set the tune for the day, tone, and brings us back to the point of control at 25.91 quarter or so. And then from there, I expected it to continue climbing 2,600. I expected 2,600 to be pegged with a high probability yesterday, so I was looking for longs pretty much all day. This dip did not happen. Would have loved to have seen it happen, because once if the market advertises lower, especially if I come in with evidence that we have a good base. Now, we've had a good base since I mentioned, on Tuesday's Trader Bite, I talked about Monday's base being pretty strong. and that the expectation is we were likely to hold and continue higher. That was the plan for Tuesday, which took place thanks to the Amazon news. And then yesterday, I was really looking for a dip lower. Traders trying to hit the bid with bids consolidating in the order flow and giving us an opportunity to catch a long on a pullback lower. Again, the bias was up. That did not happen. The plan that did work out is a small test, a quick test underneath the prior day's low. Again, I expected the market to open around 25.78 at that point. A dip below the prior day's low, an impulse up, push right through the point of control into the key stock zones above at 2600.05, and then consolidate and then continue higher with the extended target being 2627, 2628 as the key target for the day. Here's what actually happened. You want to look at it on the trigger chart on the 15-minute. Let's see. The trigger chart is very busy. Very, very busy. There it is. A lot of stuff. And so what we got yesterday was a test down of about a point and a quarter. We took out the prior day's. We opened just outside of the prior day's low at 25.7250. The low is 25.7350, and we dipped down to 25.71 and a quarter before buyers stepped in. So it was very quick, and the opportunity to get on, for me personally, wasn't clearly defined until we got to here, the mid test. But the better opportunity was right here, a pullback to mid against VWAP and the opening swing high for a continuation into this 25.9850 or so stock zone, and then ultimately looking for a test and take of the prior day's high at 2618.75. Remember I said the 2600 was likely to be taken out with high probability. The entry for the long was planned for around 2585, the 2585 area, and that would give about 15 points of target for about 7 points of risk overall, which is relatively wide. So the market ended up rallying into the close, and pretty good trading to the stock zones here. We pushed from there to there, pulled back, middle of nowhere, consolidated, pushed to the stock zone around the prior day's high, pulled back down to the 25.98-ish stock zone or so, or the 2600, and then push up and so on and so forth. And we ended up at 26.49 and a quarter, or 26.49.75 on the high. Since then, the market really traded higher, continued to trade higher, and I watched it do so on the heat map. So when we look at what the market did yesterday or overnight, it pretty much continued to trade higher and didn't back off at all. So we opened somewhere near where we closed. We tested the point of control at 26.40. What is it? 44 something, 44.75 or so, and that's the low of the overnight session. And the market just took a bid from there, and it just continued higher. There's no looking back. There's no pullback. The way the market closed yesterday, let's go back to this screen. The way the market closed yesterday, with the point of control near highs on a trend-like profile, there's a high probability of a continuation into the overnight, and let me see. Yep. There's a high probability continuation into the overnight. Didn't know really where it would likely end up, but what the overnight profile is saying is that shorts are being squeezed, are continuously being squeezed, and continue to cover. So again, after Monday's low, that was the expectation going forward. As far as what we're looking for today, let's clean this up. So many levels, it's hard to keep track. All right. Actually, let's kill this. Extending these lines isn't very useful unless I'm doing some research. Ooh, computer's very slow. All right. So this is where we are. Pull back the stock zones. By the way, those of you who were receiving stock zones as part of your Bookmap feed, they're no longer on there. They're restricted to Convergent members now that we are on our way after launch. We're opening out of range. Okay, we're still inside of this big area that we were stuck in for some time. We're inside of this massive MC area, and we are clearly back into the balance that we've been in. We're above the point of control of this area, and so overall, well, let me see. Yep, the point of control of those last those consolidation days. Overall, we have a lot of targets up above, and the next area up to test is at 2676, last week's high. So we're opening out of range in here. I expect a small attempt lower, but I expect the market to leave a gap below. It'll be very interesting if we push back into yesterday's range, but I expect the market to dip a little bit. I'm looking for a trade long right in here, right in this area. And then I'm looking for it to push the overnight high and make a beeline to 2676 today. Hard to say what the news flow will be like and what's likely to push this thing around. 2680 is on deck given the recent ranges, and then the market's likely to balance out into the close. The profile coming out of today is expected to be thin at the bottom and then consolidate with a short squeeze, another short squeeze profile into the close. That's what I'm expecting on the primary plan. The secondary plan is we push up as usual. When we're out of range, we push up, we test a significant area, and then we have a dip that tests the prior day's range down to the point of control and back. I expect this because of the range that we had yesterday. I suspect that today could very well have a resting day. We end up with a balanced profile, and we are consolidating or accumulating energy, potential energy for those physicists out there, converting kinetic to potential energy by consolidating or coiling for the next move up. I expect this gap zone to be tested, in the next few days from the 22nd of March. Those are the two key plans. I want to just make sure that what I'm saying is relevant. It's important to me. If you have questions during the broadcast, you do have the ability to send a message. Send a message through YouTube, through the YouTube video in front of you. But you also can tweet at me. It's twitter.com/FutureTrader71 or at FutureTrader71 to let me know if there's something that I keep rambling on about that is unclear. Because, it's a waste of my time or your time if we don't connect. That's the whole point. We're making our own market here on YouTube. It's our little eBay. In any case, good luck today. Convergent members, we have the anatomy of a trade today. We have a session today at 3:30 Central, 4:30 Eastern. The invite was sent last week or weekend, and you should also have access to it in the member calendar. Good luck. Take care.